Hey traders, Nick Shaheen here recapping the action in week ending Friday the 13th of March. Oh my god, what a week. This is a week for the record books. We're looking at the SPX, but I just want to recap the week. The day ended on a huge up note, but after a even huger down note. And most of the up was done in the last few minutes of the day. So it was iffy at one point. The small cap started green and then went minus 2.5% or whatever, and then ended up 7 or 8%. Huge swing. Yesterday we're down 11%. That's a basket of 2,000 stocks. Nobody talks about it. Everyone talks about the Dow, 30 stocks versus 2,000 Russell 2000, the Russell Index, the RUT, or the ETF of it is IWM. That represents 2,000 stocks. So not enough is being talked about it. A little bit more about that in a little bit. So this is the SPX. I just want to share one thing that, before I forget, down below in the description there's a link to come meet us at the chat room. We can learn something. It's free to start. And also subscribe. It's completely free to the YouTube channel. So those are two separate things. And the reason is that because technical analysis is a must in every investor's pocketbook or toolbox. If you don't know it, you should follow somebody who knows it because it tells a lot. We were ready for this. We didn't predict it, but we knew it was coming if X happened, and X happened. And I'll show you what. This is a daily chart, which most people do. SPX, that's the index, the S&P index. And no lines. I hid my lines. There's so much information there, but not enough information to actually act on it on one time frame. What does that mean? It's one daily chart. We need more information, but let me show you my lines. Okay, there are a lot of lines that are going to show up. Am I on the SPX? Yeah. So all these lines mean stuff to me, but the one I'm concentrating on is this triangle-looking thing. And for it to come clear, I have to go up one time frame to a weekly chart. So this is a weekly chart now we're looking at of the same index. So I'm going to zoom in a little bit at it so it becomes clear. So when we were falling and we bounced, I drew the pattern and I said, hopefully on this bounce, this is weekly, okay? So there's a whole bunch of days in there that you don't see right there. So I said, hopefully that this bounce, we're not tracing out a right shoulder to the pattern. We're not tracing out that second pyramid there, because that would then make it a head and shoulder pattern, which most of you are familiar with. And if you lose the neckline of that head and shoulders, then what is the neckline? It's the place where, so this is the neckline right here, right? If I extended that way, it was resistance at one point. They fought over it for a while, a long while, and they finally broke through it and defended it once and defended it again. And then they tried to defend it a third time. So when you fail defending it and you trace out two shoulders and one head in the middle, so two humps and a big hump in the middle, and you lose the neck, then the sellers overwhelm the buyers. The buyers are tired and they fall. Technically, they've calculated the fact that they fall as tall as the tallest peak to the neckline. So in this case, I drew this line, which is smaller than the tallest peak, but that's my mojo. I'm not a technician. I'm like a blend of a technician. Self-taught, don't speak the language, but I know the terms. I choose regular English for it, though. So, sorry about that. The chat room's still open. So I estimated that this will be the drop, and I shared it with the group. If you get my emails, you know what I'm talking about. So look at where the lowest point of this week was in the SPX during normal hours. Almost exactly, if not exactly, to the penny. I can't make this stuff up. I have charts of it without this candle, so you can call me a liar if you want to, but I'm not. So, and to the point, look at this one that I drew months earlier. I had the same scenario up here. I didn't predict it. I said, if we lose this one, we're going down to here, and I drew it back then. We came pretty darn close months later for a different situation. So the levels I pick are right, but the logic is the same. And this is the point of this conversation. The problem here is not the virus. The virus is tragic. It's a human tragedy. The flu is a bigger tragedy, but we have a handle on the flu, and the only difference is the vaccine. we don't have a vaccine for this one, so if we're fighting the battle, it's like having a faucet that's open, pouring water, and we're bailing out and we can't stop the water. The vaccine will stop the water in the sense where if it's 70% effective like the flu is, then those poor people that are on the front line treating the sick know that there's a buffer behind them that's not going to bring the same number back because they're going to have a vaccine, and it's 70%. So the exponential factor goes away and the repeat factor goes away. So the problem here is not the virus. It's how we react to the virus caused the financial problem because we shut down the frickin' world. We just said the world shut down, which was insanity. There were so many better ways to handle it, but I'm not an expert. I digress. The problem is sentiment for stocks. The problem for the world is the virus. The problem for stocks is sentiment. And back in 2018 when we crashed into Christmas, I thought the sentiment was as worst as it could be, that it can never be worse this time. But it became worse. People were hoarding toilet paper. So that's clearly bad sentiment, even on the main street, not just on Wall Street. So it's important to note that. And that's why I drew my targets. I didn't think we were going to beat the lows of Christmas. We did, not in the SPX. The RUT, which is a basket of 2,000 stocks, which fell 11% yesterday, rallied 6 or 7% today, but from a hole of 2.5% down in the morning. 2,000 stocks to move plus or minus 11% in one day. They say a correction is 10%. The whole 2,000 stocks had a full correction in one day, and a full anti-correction in the second day. It's just crazy. Sentiment is extreme, and that's just wrong. Okay, so when sentiment flips, this will be over. The stocks, because Wall Street doesn't like uncertainty. Give it a vaccine, now uncertainty. It doesn't need an actual vaccine. Yeah, it's a year out or whatever. It needs a set path. It needs, hey, now the talk is we're working on the vaccine, we're optimistic, we should have it within a year. As opposed to, we got a vaccine, we found it, here's the solution, we just need time to produce, here's the schedule. That's it. Wall Street just needs certainty. Uncertainty is no good. So next week, we're going to have a whole bunch of uncertainty because now we're testing. Now we're going to get numbers that are going to blow people's minds. I may have had the virus. I had a nasty cough last month, and it lasted for a while, and I don't know what it was. I never had it. I had a runny nose in the beginning, I think. I thought it was a cold, and then this nasty, just cough, nothing but cough. My abs were sore. I was coughing so bad. My wife had similar symptoms like a week before me, and then a week after me, kind of like we took it back and forth a couple times between us. So anyway, so we don't know how many have it. And if the number is big, that ratio is going to get smaller and smaller, which is good news because right now people are talking 2 and 3%, which is insane because you don't have a ratio except in Korea, South Korea. And their ratios are tiny compared to the estimates in the news because the news wants to inflate everything. And that's how they make money. The bigger the the more eyeballs. Back to the stocks. You could be ready if you know this pattern, and as soon as it loses the line, believe it or not, the technicals work. They worked last night. They worked this morning, and they work on any time frame, on a 5-minute time frame, on a week time frame. Gold, we caught a big rally just based on a weekly chart. I'll go through it in a little bit if you want. And so it's a tool you need in your tool belt. Learn it or join somebody who knows it just to get. I send them out in an email twice a day, and all this information is in it. So if you don't want to do it, get the email. Okay, so this is the SPX. So I spoke about the IWM. I'm going to reset it. This is a weekly chart. I'm going to take out all the noise. All right, so I'm going to go to a monthly chart. That's no noise. So this is 2000, from the year 2000, September to now. So a lot of data. And this is the Russell 2000 IWM, which is the same as the RUT. If you're more comfortable with the RUT, we'll do that. They look the same. All right, so we had 35% drop, if not more, from top to bottom, 36.5. They never made a new high, but they came pretty close. They love saying that on CNBC. They want to call double tops and all of that. But I know what I know. And I know that this is a consolidation zone here. By the way, this right here is the Christmas crash. People saying, oh, as soon as the Dow hits the levels of Christmas or the S&P hits the level of Christmas. Well, this one blew past it by a mile. But look where it stopped. It stopped in the cluster. This is months. I mean, this is like a year worth of fighting over this level. It shouldn't be butter on the way down. They should put up a fight. Even if a big bounce and then to come back and then lose it again, and then you can talk 800 and 900. But it's one level at a time. So I don't know if we're going to 800 or 900. It's a possibility. If we bounce here and we come back and we lose this, same reason I drew that orange thing back there, I'll draw it again here. So if we bounce and lose this, we'll come down to 850. Easy. Easy. But there are lines in between. So there's the whole cluster here they're going to fight over. There's these wicks that they left down here. These are monthly candles. So the month could be, this candle could be up here by the end of the month. We don't know. It could be green. We don't know. It's in progress. But this tail doesn't change. This stays down here. So you can see where pivot levels visual. Like this is an inverse head and shoulder. And the rally should have been from here to here size. This size. If I go like this is it. They fought over the second plateau and they went up. So plenty of information. There's plenty of information on top of your fundamental trading. So if I like Starbucks, I can do the same thing with Perfect example. So this was a buyable bottom. Or, say it differently, if I held Starbucks stock and I didn't sell it up here, I don't sell it down here. Because it's falling into a cluster of support. Whoever fought over it here, they're going to fight over it here. I'm not saying it's cheap here. I'm saying it shouldn't go butter. This is support. Now, if it bounces and come back to it and loses it, okay, then it fights the second level of support, which is here. This candle should be foolproof, should be bulletproof. I know it's way below now, but this is the logic. You follow it. You know, Boeing, 2 days ago, Thursday in the morning, it was in the 240, 230. Somebody said, where do you think it's going? It's going to bottom at 220. Somebody else said, yeah, that would be great. I'm going to sell puts at 220. I said, no. I don't see a level until 180. They said, oh, come on, that's crazy. Or they said, that's insane. It's in the chat room. I can copy and paste it. By the end of that day, it had been at 150 something. So, is it a good deal here? I think so. But you know what's a better deal? Did you know you could sell a put in Boeing at 85 and collect $8 for it? That was before the close. After the close, it's going to fall a little bit. Fitch downgraded its credit to negative watch or whatever the hell it is. Like they know anything. What? Yes. So somebody will pay me $8 today to buy their stock of Boeing at 85. How does that work? They pay me $8 per contract. So one contract covers 100 shares. They have 100 shares. They pay me $800 today and say, here's $800. Promise me you'll buy my shares at 85 if it falls to below it. I promise, my friend. I'll take your shares. So I'm getting paid for the chance to buy Boeing 50% cheaper than today. You heard this right. Somebody's paying me to buy Boeing at a 50% discount from today. Why would he do that, or she? Because they may be long from 30, and they may draw their maximum loss at 85. So it makes sense for them. They're not idiots. So that's how it works out. So effectively, I'm committing to buying the shares. So I would never do this unless I want to buy the shares. Unfortunately, your broker would let you do it. And I'm not recommending you do it. Selling naked puts is dangerous, but selling them when the VIX is this high is very lucrative potentially, because this number, 8, should be like 2 under normal circumstances. But the VIX is so bloated that the implied volatility, which is how nervous people are about a stock, is amplified tons. So doing this yesterday would have been probably $20 for selling it at 85. I just didn't think to look. I was just too busy. I'm just saying. So Starbucks, you can do the same with Starbucks. If I wanted to own the shares at 50 and say, dang it, I missed them at 50, I can sell the $50 put. And next time they get to 50, I'm long and I got paid for it. So my break-even point in the BA is 85 minus 8. So I break even lower because the money I collect is still in my pocket. So yeah, I own the shares at 85, but I don't start losing until those $8 run out. So it can fall to 84, 83, 82. I'm still profitable. I can sell them at 80. I'm still profitable. So once the $8 run out, I'm even. And then I can decide, you know what, I don't want to lose any money, and I can sell the stock below that, $8 below that. That's how it works. The only way it doesn't work if it goes to zero, then you're long at 85. But you would have been long at 150 if you buy the stock today. So anyway, that's the way it works. So moral of the story today is don't poo-poo the actual technicals, because they do have information. Look at these volumes. Oh my gosh, these are monthly. Must be something going on here. Weekly. Okay, so these are weekly candles. Big red. This is a legitimate test. This was the Christmas test. 1 poke in volume. Look at these volumes. This is insane. This is just insane. Wow. I'm going to go to the Qs. Okay, not as big a discrepancies. These have FANG stocks. So this candle is not bearish. This candle is a weekly candle. So what happened? They opened a week. They said, I love it. No, wait. I hate it. I hate it. No, wait. I don't know. I'm going to close it exactly where we opened a week almost. But here's the important part. Look left. Okay? It matches up with what? What do we call this? A neckline. So how does this work? They come to this area, they fail. They come to it again, they fail. They come to it again, they almost win. They come and fail. Higher lows, attacks from higher lows. They come to it, and boom, they burst. They came to it, they're defending it. Mind you, the test was so big that they sliced through it, but let's see where they close. This is a weekly, this is actually closed. Let's see how it unfolds after that. But usually uncertainty like this brings bigger candles this next time. Don't know up or down. So let's see what the headlines are. Okay, so one last example of technicals. Sorry about this. Last night, the S&P, today is Friday, so the S&P was there. It was drawing patterns, and one of them was like an inverse. I can't remember if it was an inverse couple handed, whatever. This is another argument for technicals. And I said, if we lose this, I think it was 251 something. Let's call it 250. 251 and change. We're going to 242 to 238 is my eyeball target. The target was actually deeper. But then again, I employed my eyeball system, non-Wall Street system, non-technical system that works very well. And I came up with 238 to 242 range. After hours, markets bled and just fell off a cliff. Tick, 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 tick. They came to 242, and they bounced. They went to 240 and held. Okay? So exactly in the middle of my range. So, but that's not the impressive part. The impressive part is this line I drew years ago on a long-term chart, and Thinkorswim, the platform, carries the same drawings from every chart on any window I have into the same. It tags it by ticker. So this was drawn on a weekly and a monthly chart trend, and here it is. I can't make this up. Look. Hello? Machines know the same lines. So I'm drawing proper lines, and machines draw the proper lines. So the point is, the machines are trading 80 to 90% of all trades, and they become self-fulfilling prophecies. So here's the thing. So today we closed way up, but now we have two lines, one at 250 and one at 240. If we lose the 250, they will test the 240, and God help us if we lose the 240, because then 215 comes into play. What? Okay, I'm going to leave you scared a little bit, because everybody needs to be scared on a day up this big. I don't think I can show it here, but I'm going to try to. Okay, so this is the SPY, and I'm going to try to emulate a disaster scenario based on the headlines. So today was great, right? Yesterday was not. So that's that 250 mark, that 251 mark that I was looking at. Let's say next week they do this, hey, no, and then somehow we lose 250. We're going to go to 240, and if we lose that, we're going to 215, 220. So those are the targets. So job number one, do not draw a right cup or a right shoulder, whatever, a handle, And if you do bounce. Get to it and bounce and do something like this. This is going to be resistance. So if I'm long, I exit here somewhere. And if I'm long, I better hope they bounce off of here, because if they don't, they're going to 240. And if they lose that, then they go into here. I'm not calling for it, but just like that triangle on this SPX we started with, that's the scenario that could happen if this happens and if that happens. Those are two different scenarios. Scenario one, they could bounce here and then come back up. We don't know. So all this is to tell you, you need to do homework. You need to add technical analysis. And if you don't know it, join a group that does. I send out 2 letters a day. Most people, well, if you already got them, read them. I know not all of you read them. Anyway, Nick signing out. Don't forget to subscribe to the YouTube channel. It's free.